Welcome everyone, and thank you for joining the call today with PayGroup's first quarter FY 2022 update. On the call, we have the CEO, Managing Director, Mark Samla, and the Chief Commercial Officer, Sachin Gokulani, as well as the CFO, Elise, on the line. So please feel free to input your questions during the presentation with the Q&A button below. And for those who have not heard the company before, PayGroup is a fast-growing, one of the fastest growing SaaS, HCM, and multi-country payroll outsourcing companies globally. And we will have Mark to start off with the presentation. Thanks, Mark.
Thank you, Cyprus. Thank you, Cyprus, and it's a pleasure to be here on the Spark Plus webinar. Thank you for the invitation. So today's presentation will be predominantly by myself and Sachin, our Chief Commercial Officer. Obviously, Elise, our CFO, is here to answer any questions should we feel they should be directed to her. So today we'll take you over who the business is and a strategy update for us. We've recently acquired a couple of companies that are right on point on our strategy, so we'll give an integration update there, and then we'll close off with some guidance for you all to work with. So just as a reminder, I am the founder of PayGroup. It's been an area of expertise of mine and the board for quite some time, well over 20 years. And the investor thematic that we have for PayGroup and why we're all deep shareholders as board employees, and certainly the very impressive institutional base of shareholders, is because we are a repetitive revenue business. All of our contracts are 3 years with automatic renewals. And why we are so focused on repetitive revenue is because our customers trust us for compliant payroll solutions. They are mission critical. There is no choice but to pay your people accurately and on time. And that's not a simple feat across the 41 jurisdictions that we actually operate in. Once we've got that level of trust at the global or regional headquarters around our payroll solutions, then we cross-sell or upsell them into our talent suite of HCM modules. And we'll explain about those a little bit further on. As I mentioned earlier, we have regulatory and compliance expertise across 41 countries. So there is a deep element of RegTech with us. And we've got an outstanding client base of 2,200 customers growing in all of the 3 segments that we operate in. And importantly, whether it's you as an investor or our customers acquiring solutions from us, we're recognized by an independent industry analyst as opposed to a financial analyst, and that is Gartner. And we've been in their market guides for multi-country payroll solutions now for 4 years running. The latest accreditation by Gartner just came out recently in the last week. So procurement people can realistically go to Gartner, download those guides, and see that we're in there with other billion-dollar companies. So whether it's you as an investor, me as a major shareholder, or certainly a client wanting to acquire PayGroup solutions and services, this is how they buy. They buy that, are you compliant and do you have volumes across the region? Well, there's 6.7 million transactions that drive our revenue. Do you have something to sell to me beyond that? Yes, we do. Our HCM suite, which is world-class and competes with all of the big boys, so to speak. Do we have regulatory and compliance and expertise? Absolutely. Do you have a customer base that's referenceable and growing? Absolutely. And of course, the independent data points about Gartner are always very relevant in a buying decision. So how are we governed and how do we drive our strategy? PayGroup is very much focused, as I mentioned to you, on mission-critical payroll and HCM solutions. If you're an Australian investor, there wouldn't be a week that goes by in the Australian Financial Review or The Age of some sort of employment underwage scandal. there's always something that's popping up. In fact, for those of you that know Regis Healthcare, they actually announced $40 million underpayment going back 6 years, just in the press a couple of years ago. It's on the board's agenda. And so speaking about boards, at PayGroup, we're driven our strategy by our board, and they're all independent global experts in the space that we operate in. So PayGroup does payroll compliance solutions for corporates. Think DuPont, Boston Consulting Group. Some names will come a little bit later on, Westpac. The global leader that we have driving our strategy there is Frank Niron-Bancel. He came from the Goliath in the industry, ADP. And for those of you that have got the Spark Plus research note, you'll see the comp to ADP within that research note, and that's Frank Niron-Bancel. He drives our global partner program, our strategy pertaining to how we gain more customers in that corporate space. Then the other segment that we work in very strongly, and where a lot of our pay slips are driven, is in payroll solutions, SaaS, in the cloud, 3 years repetitive revenue for workforce management companies such as Michael Page, such as Hudson. And Ian Basser, who's our non-executive chair, was actually the managing director of Chandler McLeod up until the time that they delisted and sold to Recruit.com, a multi-billion-dollar workforce management company listed in Japan. So you can see the streams that we work down on our mission-critical solutions are really led by our two directors there that are globally recognised. Sachin will take you on a little bit of a journey about our payments and how we make money from moving our salary payments around, as well as other transaction areas. So naturally, having David Fagan, who's a banking expert on the Medibank board, and was a CEO of a significant law firm for 25 years, currently the chair of BDO as well, really helps Elise and our team operate in the transaction elements of payments and how we move salaries and funds across the different jurisdictions we operate in. And of course, from a capital markets perspective, Shane Gill, most recently with Canaccord, has known our business for 3 years and assists the company and the executives on the capital markets and our focus on particularly areas of compliance, and sits on as the chair of our remuneration committee. All of our C-suite leaders are experienced in industry, and most importantly, I point to the recent hire of Jerome Gouvenel there. His appointment is on the ASX as the Chief Product Officer. He came from ADP. He ran ADP's Innovation Lab, and I think at last count, ADP are an $85 billion company, something like that. Cyprus will correct me, I'm sure. So take industry leaders from mega companies such as ADP, bringing them to the exciting market of Asia Pacific for our rapid growth story, looking at our technology stacks, making sure they're operating with the best efficiencies and moving them onto low code is all a part of what Jerome's here to do for us going forward into the future years. So as a background, I'm ex-ADP, Chris Brunson's ex-ADP, Jerome's ex-ADP. There's a very strong DNA of fast growth in the Asia Pacific area within our C-suite and our board. Thanks, Sach. We listed a few years ago on the ASX, obviously, and the growth has been excellent and directly exceeding all expectations in our prospectus, and every year that we've given guidance thereafter, we've ticked that metric of exceeding what we've done. Because it's a repetitive revenue business, and because they're 3-year contracts, we gain great visibility. So we will continue to deliver outstanding solutions for our customers, multi-country and workforce management clients, such as the recruitment customers I mentioned, across Asia Pacific, and we'll continue to drive those pay slips and that client acquisition significantly in FY22 and beyond. We'll continue through automation, focusing on how fast we implement in weeks and months, not months and years, in weeks and months, so that a client comes to cash as fast as possible with the highest level of quality in our implementation areas. And that's a big focus on our product innovation roadmap. Satsuma will talk a little bit later on about our global partner program. Our business has a high functioning sales organisation across these jurisdictions, all selling to regional or global headquarters and letting gravity work for us. We're taking a control position in these customers. And we may get one or two countries, one or two solutions to begin with, and then our account management engine and our sales organisation steps up to upsell and to cross-sell. And in particular, great cross-selling is happening because of more countries on offer. And the Global Partner Program are billion-dollar companies who have no experience or expertise in Asia Pacific and rely upon us to be their arm. And we'll show you a little bit about that and its effect on our financials soon. And of course, it's all about talent. Anybody that says anything today about their inability to manage talent, whether it be onboarding, performance management, payroll, just the very basics, interfacing, deep integrations, that's what we're experts in. And that's why we're able to have such a great client retention. So, as I mentioned earlier, multinational enterprises is where we started. We then moved strategically into workforce management companies. So that's where companies hire people and then contract them out. You know them, Michael Page, Hudson, Bedison, are all of our clients, down to smaller contracting companies that are bespoke with 30 or 40 organisations. Yesterday, we signed a very exciting new customer that out of Western Australia that's focused on Indigenous recruitment. And that's a very proud moment to know that we can also affect some really exciting new business segments in the marketplace. And the last segment that we entered into, because it's fast growing, because it's generally backed by funds, such as KKR, and because there's a high turnover of staff, which makes it very complex, is franchise and retail networks. And we'll discuss that a little bit further on in our integration update, but they're all fast-moving, growing segments. And the displacement of staff because of COVID, the work from home or the remote working has only given us a great tailwind with which to digitize these platforms for our clients. So yes, everybody asks me the question, are you ready for the new normal? 100%. So you walk up to your work environment, facial recognition opens the door control systems. It's got a temperature check control. If you've got a high temperature, the door won't open. So for those customers that want to implement that, the answer is yes. Go and apply leave from your app. It's very straightforward. So we're making life for the new normal as simple as possible for our customers. We have a leading position in Asia Pacific, and we're very, very focused, as you can see from the darkened geographies on Asia Pacific in our 41 countries there. But of course, our customers sometimes want us to look after their requirements in non-Asia Pacific. We have a partner program that looks after that, governed by ISO, but all customers see everything in our platform, in our SaaS solutions, in our mission control platforms that we own the IP of. And we may pull some information from the UK, which is done by a partner, but ultimately the customer sees everything with us. We own that deep regulatory experience, and we continue to focus that sale on compliant payrolls and the upsell. So we may win one company with 3 or 4 countries, and then we upsell them into the balance. Our largest customer by geography, to give you an idea of scale, is 22. Now, importantly, what we've done in this fiscal is expand our presence and our investment into Japan. Japan has our highest unit economic in our business by a long distance. And for whatever reason, despite what's happening in the world and what we heard through the Olympics, Japan is hot. The amount of inbound investment into Japan and the amount of support that we need to give our customers and our new prospects for Japan is certainly something new to me in 20 years. Now, because it has the highest unit economic, that's wonderful, and certainly it improves our gross margin position. But we are directly present in Japan, thanks to an acquisition of our exclusive partner recently. And we've continued the investment in implementation and operations and strengthening our team there with active recruitment. So one area of excitement, although relatively small in payroll numbers, is the dollar value that we obtain for a payslip in Japan compared to the rest of Asia or the rest of the world. So we're definitely heavily committing ourselves to Japan. So we've talked about our client base, and I'd like to reinforce the fact they are 3-year minimum contracts. That's what our clients sign. Some of them are more. They have automatic renewals in them. 99% customer retention. That's moved up from 95. So in a dislocated world, thanks to COVID-19, with a whole lot less face-to-face opportunities, which is clear why, we've been able to increase our customer retention. And that's thanks to the investments in our technology, in our platforms, and how we're communicating with our customers, but also because our solution set is growing in terms of modules as well as countries. It makes the client stickier. And of course, we've got 2,200 clients and growing. That gives us an absolutely terrific base as to whether or not we have the opportunity to upsell. I noticed the polls just popped up, Cypress. I'll pause there. Great. So an example of our customers, Appen. Appen started with us for 2 countries and now are over 8. Everybody who's seen tech stocks on the ASX would know who Appen are. Hudson, we've talked about. Michael Page, we digitized the back end of their entire business, onboarding, payroll, and then billing to their clients for the contractors they send out. So it's a deep, deep platform that Hudson, Michael Page, and another 400 contractor management companies look to us to execute for them on their day-to-day business needs. Mission critical. It includes payroll, it includes billing. Of course, the fact that we have banks such as Westpac means that our solutions are robust, are predictable, are governed, have great ISO standards. You don't work with banks for 3 contracted periods, that in the case of Westpac, if you don't have all of those things ticked off. And recently we signed, Canaccord, who are listed on the Toronto Stock Exchange. I'd like to specifically point to the franchise area, and I'm going to ask Sachin to expand on those a little bit in the integration update, but it's fast growing. And on the right-hand side, some examples of recent sales wins. Hudson RPO. Hudson are a client of ours in Australia. They've spun off and created another RPO division out of Asia that's headquartered on the NASDAQ. That's listed there. They have, thanks to our great work in Australia, onboarded our solution set for Singapore. So that's an example where a sister company or a related company takes on our solutions in a new jurisdiction, thanks to the great work that we do specifically in Australia. And that is a very nice deal for us. And you'll see in our TCV updates, total contract value sales, how that's impacting. Weatherford are an existing client that have taken 6 new countries. So the cross-sells and the upsells are being focused on with the account management team as much as the new sale wins and the new logos. So pleasingly, our board recently released guidance of between 35 million to 37 million for ARR in FY22. The CAGR growth is impressive and will continue on that impressive CAGR growth. And importantly, within that guidance area is the further confidence that we've done $4.6 million of new contracts in Q1. So a significant increase on the previous reporting period. And that is as a result of our excellent client relationships, our innovations, our great module suite, and our country breakup. So that is terrific to know. It's our second largest quarter ever. At the beginning of the year means as we implement, it gives the most statutory impact to our revenues this year. The strong demand continues across all of our businesses, and our funnel is significant. Our funnel is 5x of what it was last year. So despite our great sales, the tailwinds of COVID and the excellent work that our sales team are doing along with our implementation group means we've got a significant pipeline of opportunity. And we've always invested early in optimizing our sales team, and that's proving to be great results now, particularly with our increased focus on digital marketing. That's providing some great responses from client upsells through webinars and the like. So a great continuing foundation for our organic growth. We did announce at the beginning of Q2, COTI on the ASX. That number of 4.6 million does not include the COTI contract, which more than likely is our largest contract ever. So we're delighted about that. Sold out of a combination of France and New York, signed in Singapore. I'll pass on to Sachin now, and I'll let him go through some of our operational highlights. Thanks, Sach.
Thank you, Mark. So just repeating the themes of growth as how we've gone into FY22. We are a March year-end company. So our Q1 is all about continued payslip growth, and every payslip is a revenue generating event. So every time you see us report additional payslips, it is assured that revenue is going up. A 12% increase from the exit Q4 in FY21 into Q1 FY22 is just great growth. And that's where the board and management had the confidence to give our ARR exit guidance for FY22 so early in the year. So top line focus is there. And we've also got a very steel focus on our gross margin. And it's the first time we've actually declared our gross margin to the public. Very happy and proud of that. And thanks to Elise's work, we've been able to look at what the average gross margin across all our verticals, our services and solutions are, and it's currently 50%. What's underpinning the growth and the gross margin is what Mark was mentioning very briefly earlier, is our global partner program. It's where we don't have on the ground sales presence, and that's North America, predominantly Europe, and those leading companies which are selling very similar solutions to PayGroup in their jurisdiction, and they're selling it for, let's take examples, 50, 80, 90 country solutions. PayGroup plays a part in those contracts because we are the preferred operating and implementation partner for 41 out of those 80, 90 countries. So those global partners sign the deal. They take the cost of acquisition of that customer. We already have a deep integration with them. So when they sign that contract, we get given a letter of engagement, which we then implement and operate as per the timescale. And the contribution that global partner has given us has now grown to 28% of our contract value that we reported in Q1. So it's a low cost of acquisition for us, which means it impacts our gross margin better. And the unit economics is fixed at a good level because we don't discount our rate card. We have a rate card with our global partners. We don't give commissions. We don't give rebates. It's what we sell. And because we sell it at a lower cost of acquisition, that impacts both revenue and our gross margin positively. And of course, when you couple it all with 99% customer retention, the predictability of this business is very easy to forecast. So just again, showing the growth in our payslips, not just in the last quarter, but since listing, we have grown 17 multiple of our payslips, and every payslip is a revenue generator. So that's where we've also really grown our statutory revenue and our ARR, and we continue to grow that with our organic and acquired sales. It's all because we are trusted, because we are doing payroll in 41 countries, and we have a deep understanding of regulations and compliance in every single one. And I think Mark reminded us all earlier about the underpayment scandal in Australia. Well, that's the problems we solve globally. Our reporting is very, very transparent and streamlined. So a CFO or a HR director who may have given PayGroup a 15-country solution gets one view of all their workforce as they look at the total dollar spent, number of headcount in each country, all within a dashboard, which most commonly they would go running around trying to consolidate from various ERP platforms. So we integrate into those platforms too for them as we push those financial information back into you. And of course, we always look to optimize how we deliver our solution. And that's why clients keep trusting us, because we're giving them more and more process innovation. We're giving them more trust and compliance guarantees, as well as giving them some product innovation, especially thanks to Jerome coming on board recently as Chief Product Officer. I'll briefly touch on two key acquisitions which really underpin our strategy, as Mark highlighted earlier. And the first one is that new vertical we have added in the franchise sector in Australia and New Zealand. IWS, the market leader in Australia in rostering and payroll solution. But the market leader with over 1,000 clients is still only about 1% of the market. There's 98,000 franchise locations in Australia, and we as market leader have just over 1,000. So great opportunity, and now giving IWS into the PayGroup family that whole sales and marketing horsepower, giving them the infrastructure for delivery and the additional technologies, it's only going to get better. And one thing that is very important to note in all our payslip growth is every time we add a payslip, it's an eyeball on our platform. And every time we have an eyeball, it gives us an opportunity to monetize revenue even further. And an example of that monetization is where in Australia, a contractor, an employee, a franchised location worker has a choice of superannuation fund. And through our embedded workflows in our solutions, we give every onboarding employee in each vertical a choice of choosing our superannuation fund. And that gives us an additional commission revenue each time someone looks at it or signs up for it. So 6.7 million eyeballs today. You keep looking at the payslip growth, the statutory revenue will increase for payroll, but the monetization will also increase our revenue. And monetization comes with very low cost of delivery. So IWS have now been integrated within our monetization suite. So they're going to be recording more and more revenues in their 420,000 annualized payslips as they go through the growth journey. They have a really great captive audience. Some of the large names like laser clinics, they have Subway, Nike stores. So they'll grow into those. And as Mark mentioned earlier, a lot of their customers are owned by the large funds. So KKR owns laser clinics. And with funds owning such great franchise brands, they believe in exponential growth. And that's a case study I'll come through shortly in how laser clinics is growing really, really well globally, thanks to PayGroup now coming into the picture with IWS. So what was the rationale and how is it working out? Well, local franchise growth, as I've mentioned, we've just had 1% of the market, and the growth will be supported by PayGroup's sales and marketing engine. We also help them expand from Australia and New Zealand into our other 41 country infrastructure. And Laser Clinics has now moved into Singapore, and they've also moved into UK, thanks to PayGroup's infrastructure in both locations. So that's driving more revenue and making the client stickier for us. And of course, there is that medium longer term view of how do we take the franchise vertical in different markets. But let's be honest here, when you've got a 99% opportunity into franchise locations in Australia, that is a really great visibility on where the growth can go. And that's the laser clinic study. It's gone from a 2-country solution, Australia, New Zealand. Now it's a 4-country solution straight away after signing our deal, and about to enter its 5th country. And we'll announce that once it's been implemented and gone live. But it's every franchise that grows is more pay slips, is more revenue, more monetization for PayGroup. The acquisition we made just before IWS also fits very well into our corporate multinational enterprise strategy. It's the growth in signing clients, as Mark mentioned, Canaccord earlier, in how we deliver trusted payroll solutions in a single country, but with the view to growing outside that in the future. So Payroll HQ is the fastest growing corporate payroll company in Australia, comes with a great sales leaders, comes with excellent delivery on a hybrid model on onshore and offshore, and that helps to maintain our gross margin. And with PayGroup's assistance, they've had their strongest quarter ever of sales, with 605,000 out of the 4.6 million signed for the group. And that will only get better as more and more leads get generated from our lead generation and digital marketing engines. So I mentioned experienced sales teams. They've now fully integrated into our platform. So their clients now see a single view too, where previously the clients had no aggregated platform to look at their workforce. So that's the benefits we brought to them. When we acquired Payroll HQ in end of calendar year last year, there were around 120,000 pay slips annualized. They've already grown to 180,000 in the first 7 months of our ownership. So it's real testament to the growth that we can bring with acquisitions as well as organic. And just to repeat the rationale about Payroll HQ, really great sales channel in country. We put them onto the platform to make it stickier, and that helps to grow that rationale of sales to so many waiting companies who need this solution of digitization of payroll and HCM. We've got the size and reputation to assist that growth further. And of course, don't forget, all their clients also go onto our monetization platform because it's all hooked into the one. And it just increases our compliance expertise in Australia and New Zealand. And that's also had a great effect from clients which are being sold out of Asia as well as Europe, because those clients are recognizing that our investment in increasing our compliance expertise in one of the most complicated compliance payroll markets in the world, being Australia and New Zealand, as that goes up, they get more confident in giving more of the ANZ deals to us. So it's worked both ways for the group. Thank you, Mark.
Great, thank you, Sachin. The momentum will continue into FY22 and beyond. Again, reminding everybody we're a March year end. And our guidance of 35 to 37 million comes from great conviction of our sales that we have today and our high level of client retention. It's really strong organic growth. It's the strongest that I've seen certainly in the last year, in any previous of my 20 odd years in the industry. We've seen large demand from multinational companies. They're big names, they have procurement processes, and so it's really important that we have a structure that allows us to sell a small company with a big name in a single country and implement them so that it goes from contract to cash quite fast. So we are focusing our attentions on ensuring that the sales funnel looks very strong on a balance of deals, large regional ones that are naturally slower to implement versus high impactful single country ones, such as the Canaccord deal or the Hudson RPO deal. The structural tailwinds continue. The adoption of digitization is real, it's continuing, it's embedded, and our sales process is completely virtual. So we aren't visiting customers in their locations like we used to. We've been far more efficient. And in fact, our sales leaders say, we hope this stays. It's also great obviously from a travel and expense cost perspective as well. The new paradigm of hybrid working is required. So if you haven't got some sort of digitisation process with which to manage your performance, expense, leave, claims, who's bringing paper to the office that's been touched by 20 people anymore? It's not happening. And so many organisations are still underpinned by paper. That all needs to be digitised. And of course, particularly in the last year, and Sachin spoke about this extensively and all recorded on our LinkedIn pages with the Global Payroll Association, the revolving door of regulatory change in payroll means you just can't keep up if you're running this yourself. And additionally, if you want to run it yourself, we'll support you with our SaaS. But if you want to take it as a service and we run it for you, we will. And that's quite an intelligent thing to do these days, particularly when I last looked on Seek.com and saw that there were over 8,900 open jobs just for payroll. Do you want to compete in that space? That's what CFOs have to ask themselves. Our innovation and our investment in our technology roadmap is all about innovating to allow faster implementations, to allow better margin improvement in the way that we support our customers, and absolutely increase the user experience and enhance that. And of course, we've got the opportunity now to absolutely do that in low-code products. So the ongoing requirement from a development group lessens. And that's really important for agility. Thanks, Sach. So in closing for today, thank you for your time and look forward to the Q&A. 22 will be a significant year for our PayGroup. We're very focused and concentrating on the acquisitions and our normal business as usual and extracting value. There is a demand for what we do that is at levels I've never experienced, so that's terrific. We are closing terrifically, along with our global partners are as well, feeding that revenue line consistently, all with 3-year contracts, repetitive revenue. We've ticked every mark since our IPO and we'll continue to do that. And we'll continue to scale on those regulatory mission control solutions that are very, very sticky. And we'll always focus our innovation on creating long-term value, long-term efficiency models, and therefore that increases the value of PayGroup. And we welcome you to become shareholders. And for those shareholders there, thank you very much for being with us on this journey. FY22 and beyond is extremely exciting. Thanks, Cyprus.
Thanks, Mark. Thanks, Sachin. Thanks for the presentation. I'm very excited to hear the multiple growth opportunity you guys have, including the expansion in Japan as well as the new franchise market that you guys are targeting. So we had a question that came in earlier before the meeting start, and the question is asking how do you compare yourself to Elmo Software, and what do you see that differs you guys from them and allows you to achieve the growth that you guys have?
Thanks very much. Sachin, would you like to take that, or would you like for me to?
I'm happy to, Mark. Yeah, no problem.
Okay, go for it.
So for us, Cyprus, great question. And this is not intended as an offense to anybody. It's a very common question. How do we compare ourselves to the Elmos of Australia? We come from payroll and payroll, deep trust, compliance. We come from where you have to be 100% compliant, or for bad reasons, you end up in the press. When you talk about entering a client from talent or performance or learning, you're not looking at compliance, you're looking at that strategic value add in a HR environment. And that's the core difference in what we do globally versus Elmo does in a couple of jurisdictions. So for us, that is the key differentiator. And once you've got payroll You've got the customer hooked. We do payments for a lot of our customers. They send us their millions of dollars of funds to our bank accounts to distribute to their customers and their staff and the statutory bodies like CPF in Singapore and MPF and EPF in Hong Kong and Malaysia. So that deep trust allows us to then upsell all the modules of learning, talent, performance, etc., which we built and acquired through our last 3-year journey. So that's the core differentiator, where Elmo comes from learning management talent and then try and get into payroll, but they haven't got that deep trust initially. I hope that at a very high level that answered the question there, Cyprus.
Sure. Thanks, Sachin. And the next question from Andrew is, does PayGroup owns all of its software or systems IP? And does PayGroup license or outsource any of their services or IP to deliver its service?
Great question as well too. So materially, PayGroup owns all of its software and systems and IP. So all of the talent suite, all of the aggregators, all of the client interface tools is all of our own IP. And in terms of pay slips, we would generate 6.1 million on our own IP such.
Yeah, it's 94, 95% on our own IP, correct. Mm-hmm.
Right. So, but the balance of those obviously are done in markets where we don't see economic benefit to own the jurisdictional statutory upkeep. So Sri Lanka, it's a partner technology as an example. But so, yeah, vast majority, the very, very vast majority of all of the software systems and IP that we use to deliver SaaS to our clients is all of ours. Now, in terms of the services, absolutely 99% of the services that we do are done out of our service centres with our people. We have some partnerships. You may remember the map where the lightish coloured is where our partner may be, UK for laser clinics example, but all the rest in Asia belong to us.
Great. Thanks, Mark. And the next question from Lashan is, for the franchise market, which you plan to expand into, he's curious that wouldn't the corporate office of companies like Domino's, Pizza Hut, McDonald's offer a payroll solution to their franchisees already?
Yeah, that's another terrific question. It talked about what I spoke about earlier, about how we sell. We go to the master franchisor, the fund, the regional or the global headquarters, and sell at that level and let gravity work for us. In fact, McDonald's corporate is actually our client in Singapore, but the stores are owned by a fund, as an example, BlackRock, I believe. So that's two different selling requirements, corporate or to the fund that owns the actual stores. But it's precisely what we do. We absolutely go to the headquarters, the fund, or the master franchisor level, sell at that level, and then let it cascade. That's precisely the model.
Right. Thanks, Mark. Yeah, the next question from Andrew is, with sales process being virtual in the current COVID environment, does PayGroup directly approach large potential customers where its service offering would be a good fit for them? Or as opposed to potential clients approaching PayGroup?
Over to Sachin, he runs sales.
Look, given we have as I mentioned, a leading position in rostering and payroll and I think this question's particularly got to the franchise business, I'll even say it into each vertical, corporate, workforce management, or franchise and retail. We have a direct sales team, but our reputation, our digital marketing, it does bring in quite a lot of leads. But with larger customers, we of course have a very targeted approach to them. So for example, if we know a fund that has ownership in multiple franchise brands, we would go to the fund. And from that fund, the gravity works into each brand because we've offered the rostering and payroll solution to the top layer. And it's to the question earlier, to be honest with you, a McDonald's corporate gets our corporate solution, but a McDonald's franchise has the rostering complexity because of the high turnover of staff you don't see in the corporate office. So hence it's a slightly different dynamic. But it's a great sales question. We do have targeted marketing, of course, with our source, but with our leading position and Gartner recognizing us, people will find us regularly and contact us for their 40, 50, 80 store location proposals. So works both ways. I couldn't tell you the percentage split.
Great. Thanks, Sachin, for that. Yeah, another question from Hendrik asking about how many employees do you have in PayGroup?
344 as of last count. Now, that's a great question because it leads to the thematics of our innovation. The increase in employees has predominantly happened as a result of the acquisitions. So whilst we've been growing that 17x in terms of pay slips over the years, in order to deliver those and to operate those and to provide SaaS solutions to our clients, that hasn't increased. Where the increase in headcount has come from is predominantly the acquisitions. Of late in FY22, we've absolutely enhanced our product team and there's new growth in the product team, but that's linked to all innovation. So from the underlying operating and an underlying benefit to customers, the business has only grown as a result of headcount in terms of acquisition. So we're doing more with less.
Great, thanks. I guess to follow up with that, what was the headcount of last year? Wow,
great question. We exited at 220 from memory on the FY 20 to 21.
Great.
I think that's right. Elise might have the right numbers there. Yep.
But then the acquisitions of Payroll HQ, Talent Oz, and IWS significantly added to those numbers there. And the balance, the differential, realistically, is in our innovation team where we've increased headcount. Now, remember, when we do place people into roles, we think about our gross margin and whether that role should be in Singapore, Malaysia, or in Australia. So there is absolute focus in our business to have the right person in the right location to protect margin. So, for instance, most of our implementations are done out of India, Singapore, and Malaysia on the corporate side.
Great, thanks, Mark. So another question came to me was, how should investor value your business? How much of your revenue are in SaaS, and do you have a breakdown in your revenue lines?
Elise, SaaS versus services.
Cypress, thanks for the question. So between SaaS and SaaS, in terms of statutory revenue, it's predominantly about 2/3 versus 1/3 post the IWS acquisition. In terms of the margins, as you've seen from our presentations with the IWS acquisition, they have an extremely good margin for what is a services business of 70%. The rest of our business in terms of services margin is around 50+%. And the rest of our SaaS business is around 60-something%.
Thanks, Elise. And just to remind everybody, if we do services for a customer, they also take our SaaS. So we implement our solutions and then we help them run it. So it's a combination. We just don't offer services on nondescript solutions. It has to be a PayGroup solution.
Great. Thanks, Elise and Mark. And the next question is pertaining to your share price. Curious to know why you guys are trading at 50 cents.
We see a significant opportunity for everybody on the call today and new investors to obviously see PayGroup as being unrealised in terms of that share price as we're trading today. So the market demands and the market forces I can't comment on, but what I can comment on from my own investment thesis, and I'm a large shareholder, it's extremely good value.
Yeah, thanks, Mark. Yeah, just to add on that, and as well as the question earlier on how investors should value PayGroup from an industrial comparison perspective, many of the SaaS peers are trading at an average of 13 times price to sales. And for the payroll outsourcing part, most of the peers are actually trading roughly at 3.7 to 4 times price to sales ratio. So if we were to give the breakdown which Elise shared earlier, 1/3 SaaS to 2/3 services, you could actually get a rough indication of where the PS ratio of PayGroup should stand, which is around 6 to 6.5, right? So 50 cents currently it's trading at roughly 2.1 times PS ratio. So it's still pretty much of a opportunity here.
Correct. And Cyprus, that's extremely consistent to the market and to the global environment. And of course, we see our business led by outstanding talent, great client base, long-term revenue, 3-year contracts. So it's a very sound way to build a business with its repetitive revenue models.
Great. Yes. So yeah, we have no other questions, but let's wait for 1 or 2 minutes to see if there's more questions to come in. And maybe you guys could share about how the integration between the various acquisitions will help the bottom line in future.
Okay, great. So the constant thematic on any business that we've entered into is mission critical regulatory requirements for pay. So we started in corporate, then we moved into contractors, Hudson as an example, as a client there. Then we've moved into retail and franchise network, Nike, Subway, laser clinics, etc. So the constant thematic is the ability to make sure that you're one view of your workforce. And then we upsell consistent modules such as talent. And of course, we provide the opportunity for them to use our banking to move their payroll funds across the globe, which we additionally charge a service fee for. So the integration from a technology perspective is we're very fortunate when we designed our business that the overarching IP in our aggregation platform, which all eyeballs look at, is all of our IP and everything links through that. Now, the IWS business is utilising some of that and some of their own, which is bespoke to retail and franchise network. So everything is combined into one single view for an organisation. The back office integration has been relatively straightforward because of the way those companies were structured and that they're single country, the new acquisitions, and the clients don't have any crossover. There's no crossover of franchise and retail store network in workforce management, and there's no workforce management crossover in corporate. So it's been very clinical and clean that way. And the two acquisitions that we've done most recently, Payroll HQ and IWS, we've known them for many years and been tracking them and found it, and actually partnered with them on some transactions before where we've helped them. So they're very well known, well understood, sales-focused leaders there. So the back office integration has been extremely smooth, and the client experience integration, again, is terrific. Hence, laser clinics going from Australia and New Zealand to 3 other jurisdictions nearly automatically.
Thanks, Mark. Another question from Lashan is, what, in your opinion, what is the biggest threat or competitor for PayGroup?
I think we've just gone through it to that question. The pandemic, I would have said pre-pandemic is the biggest threat that I would have ever seen. Governments rallied around, supported companies and workers for obvious reasons. Companies couldn't go broke, and we did very well in terms of the way that we performed through the pandemic, both statutorily and from a sales perspective. So I would have thought that would have been the biggest threat to our business. From a competitor standpoint, We stand unique. Nobody that I'm aware of addresses all three payroll segments: corporate, workforce management contractors, and retail and franchise networks. There are companies that do both or one, but they're certainly not that focused on all three elements. So the competition is strong. There was a mention of Elmo before. They're coming in from HCM Learning, but we're coming in through Pay. There are competitors, clearly led by Automatic Data Processing, ADP, clearly led by Ceridian, global multinationals, diffusing their talent across the globe. But we're implementing in weeks, not months and years, and that's how we distinguish our competitive advantage versus them.
Great. And is there room to increase the gross margin to levels of a SaaS company like 80% and above?
One of the great things about a SaaS company and those 80% levels, they also suffer magnificently high churn. So be careful sometimes for what we wish for about SaaS levels of companies. You know, we're looking for long-term 3-year repetitive revenue companies to be our clients. We are always working on improving our gross margin. And absolutely, every time we'll deliver something that implements faster, smarter, better, and client retention goes up, obviously the gross margins will go up as well too. So absolutely, that is a key focus of our business, hence us disclosing it to the public, and we'll continue to track and move that up for sure.
Great, thanks, Mark. And I believe in the first quarter update, you guys actually indicated that you will be, increasing your technology roadmap. So we do expect more funds to be invested into upgrading the SaaS portion of the business, and of course that would result in an increase in the gross margin as well.
Correct, Cyprus, and clearly you need to do that because of the competition question that was posed earlier, that you need to invest in technology, and because it's selling so well, you continue to double down and make sure that what you're selling can be innovative even further to improve the client experience. So correct.
Great, sure. We have come to an end of the webinar. So thanks Mark, Sachin, and Elise for presenting, and everyone for attending. If you do have any further questions, please feel free to drop me an email or get it addressed to the guys at PayGroup. Thanks, everyone. See you again.
Thank you for having me.
Take care. Bye-bye.
Bye-bye.